What is going on, guys? Welcome back to the Sunday Scan. Hopefully you guys had a fantastic weekend. Yes, I know it is absolutely crazy, but it is our last Sunday Scan of September, guys. This month has absolutely flown by. Another crazy month in the books. So just been an absolute grind this month, guys. Beginning of the month, had some fantastic moves. Like I said, guys, this past week, some fantastic moves as well. Market's definitely been a little bit slower. Definitely been a little bit of a landmine market. Prior to last week we had some fantastic downside moves. Tesla short was absolutely fantastic, and a few others. So really, just some overall really nice to get some direction in the market, guys. Really had kind of a washout day on Friday. Really big move down across, pretty much every sector in the S&P 500, guys. And like I said, we'll kind of get into that in a little bit. But this is our last Sunday Scan for September, so I do want to go ahead and get some housekeeping items out of the way really quickly. Remember, this is going to be the last book giveaway of the month. So comment down below one thing from the scan that's kind of helped you out and kind of, accelerated your trading or something you took away from this as a positive. And then on the next Sunday Scan, which will be October, first week of October, fall market is upon us, we will go ahead and announce the 4 book winners from this past month. You guys will get a book shipped out to you that first week of October, guys, and I'm really excited about that. So again, it'll be a book that kind of has helped me throughout my trading career so far. Not necessarily like trading or technical analysis related, but just overall kind of like mindset, and some psychology reading material that has helped me throughout my career. So like we talk about all the time, mindset is so important, guys, and I think that is going to be some good content to be giving out to the room. So very excited about that. Now, a couple other things. Hoodies did ship out on this past Monday, I believe. So you probably have gotten your hoodie by now. That would have been a full week ago, almost 6 days from today. And so those have shipped out, and you should have already gotten it. If not, maybe if you live like far away or if you were international. I don't think we had too many international hoodies this time, but we shipped out over 60 hoodies. I think we've sold through like 70% of our stock. We only made 100. So there's a couple more on the website if you want to grab one. And then obviously, guys, I made a big announcement this past Friday. If you missed it, after market close, I did provide an overall update on the room going into October and some of the content that is going to be provided specifically trading account wise. I'm making a change, and this was not one that I made lightheartedly or easily. This is going to be something that I thought about for a long time. I really kind of like delved into it on Thursday, and I kind of made my decision on Thursday night. And so as you guys know, if you've been in the room for a while, you know this. I did the 10K challenge starting last April. That account was at 25K on July 1st. That was a great return already. However, we took that 25K account all the way to a peak of $148,000 this month. Account is currently at $133,000. And like I said, guys, it's been an absolutely incredible past 3 months. I didn't have personally my best week ever last week, but what really matters is personally that big picture, guys. You're going to have a bad day or 2 days or even sometimes a week in trading, right, where maybe things aren't clicking exactly where they need to be for you. But the big picture is so important, guys, and I felt like this account challenge really kind of emphasized that and showed you guys what big picture consistency can do. Like I mentioned, it's been an absolutely amazing return on that account. Starting in August, I said, you know what? We've already gotten to this point. I think that was when we cracked $100,000 in August. And like I said, guys, that was the point where I said, you know what? I'm going to go ahead and try to take this to $1 million, take this to a 7-figure account. The market was really, really hot at the time. However, like I said, guys, we definitely witnessed the tape change a little bit in September, right? Not just to the downside, but just more of there was a lot more tighter range, a lot, kind of grosser market action. And this market has been not easy, right? This has been one of the hardest environments I think I've seen. So, outside of like those big down days that we've had, the past week, there was definitely some choppy action throughout September. So personally, I've kind of gotten to the point where I realized, you know what, me trading that, $150,000 account in front of everyone is probably not beneficial for 99% of people. 99% of people are probably in here trying to understand how to grow a, smaller sized account or, medium sized account into a larger account, right? And so what I'm going to do is I'm going to halt and slash end that goal of trying to get to that 7-figure account. I feel like, especially as of late, I've been probably taking less than A+ trades, trying to reach that goal and trying to really compound and stay on track to get there by the end of the year. So what I'm going to do, and as I'm going to go ahead and reset the 100K account right now, $135,000 account, back to the original starting amount of $25,000 on the last day of this month, which is going to be, I believe, this Friday. I'm going to reset the account to $25,000. That was the amount we started with back in July. So what I'm going to do is I'm going to take out $107,000 of profits, guys. That is a huge, huge, huge 3 months on an account of that size. Massive, right? So, and I think that's a great principle to get in the habit of doing anyway. And like I said, I think that that's going to be best just given current market conditions, given the state of the room. And I think, like I said, guys, I think this is not only going to be beneficial to you guys, but it's going to be beneficial to me too. I have a primary account that I trade every day, and trying to trade 4 different accounts between the new 10K, the current 100K, my own account, the 1K swing account. I've made the decision because honestly, it was hellacious trying to do that, and I wasn't taking the trades I probably should have been. I wasn't thinking them through as much. I wasn't spending enough time kind of deciphering why and when, and for those reasons, I think I was taking less than A+ quality trades. And obviously, that's what I'm trying to do, right? I have that up there for a reason. And so I think that this is going to not only help the room, like I mentioned, but it's going to help myself a lot. And, that's really one thing I need to be more conscious of. So what I'm going to do is, like I said, I'm going to reset the current, 135K account back to 25K. That was the starting amount in July. So I'm basically resetting before that massive 500% run during Q3, right? Q3 started on July 1st, and we've, 5x'd, if not more, since. So that's the plan on that. I'm going to be day trading that on a daily basis, intraday trading. And like I said, I think that'll, my sizing on those trades will be between probably $1,500 and $2,000. I think that'll be a lot more applicable to 99% of the room. And like I said, guys, I think it'll provide a much better kind of guide for you to follow along and see how I'm doing things. Now, for the other 10K account that I just started, which was initially supposed to be a intraday account, I am going to make that 10K account a high confidence 30 to 90 day swing account, right? So trading options contracts with 30 to 90 days. I'm going to try to trade that account a little bit more actively. Like instead of 1 trade a month, I'm going to go for probably 1 or so trades a week, depending on how much of an A+ setup they are. I don't want to reduce the quality of the setups, but I am going to be trying to more actively grow that $10,000 account. However, that's going to be a high confidence swing account. And what I'm going to be doing is sizing $1,000 into each of those trades. So risking 10% of the account size. Unless something is like super A+ high confidence swing wise, I'll maybe add another 5% onto that and trade with $1,500 in each trade. But between $1,000 and $1,500 is going to be risked in each of those swing trades. And what I think that will do is kind of take care of the 1K swing count challenge and merge a larger, longer term high confidence swing account. That's probably more ideal for people that are working full time. So those are the 2 accounts I'm going to be trading in October and going forward into Q4. I want to make that very clear. Q4 is really a time for me that I want to lock in. This is probably where I'm going to make, a decent chunk of my year. We've got the midterms market coming up, and I'm definitely expecting the market to really be attractive from a risk to reward standpoint through the rest of this Q4. So that is going to be the plan. I'll be trading those 2 accounts for you guys in front of you every single day, posting EOD updates. We'll have the full Discord set up for it. And like I said, guys, you'll be able to subscribe to each of those alerts. And I think that's going to really clean things up and organize things to the fullest extent. So I am very, very excited about this. I think this is going to be good for my own mental health and my trading health. And like I said, guys, I could not be more excited for October. This is really a time where I want to lock in and get after things. So that is the plan. Those are the housekeeping items. That's out of the way. If you didn't catch all that, you can read the announcement on the private Twitter. It's written down for you guys as well. So I'm very excited about that. Now, like I said, guys, coming into this week, we're going to start with the S&P 500. This is going to be my top watch for the week. Like I said, weekly candle, we kind of had that washout Friday. If we look at the daily chart, guys, on the S&P 500, we went all the way down and tested our intraday low in June. I want to double check the date. June 16th, right? And then, exactly, June 17th, right? So 16th and 17th was the time that we spent in the 360s. We gapped up 10 points after that move to 360.69. We gapped up to 373 the next day. And like you guys can see on the weekly chart, guys, we are entering a very important area on the S&P 500. We have maintained this larger scale downtrend, right? So since we rejected that upward trend, right, resistance on the SPY weekly chart, we have obviously pulled back significantly. We hit that massive resistance at that 430 area, guys, and we have pulled back since. Now, what am I going to be looking for from this possible double bottom on the weekly? I'm likely going to be looking for a future relief rally. I'm not saying it's going to be this week or next week or even the week after, but I think as we get closer to midterms, we will probably test this SPY trend line, right, which has been kind of this downtrend that we've been in, right, since the top in the market back on January 1st, right? If we continue in that downtrend, I think we would likely test, more than likely, in that 406, 407 supply area. I'm not saying that's going to be this week or next week or even the week after, but I think we are probably going to test that within the next month or two. That being said, in the short term, I'm not going to have a ton of bias, guys. The market has been extremely weak, especially on Friday, and especially concentrated in mega cap tech. If you saw the announcement I put out, I posted a research piece from Yardeni Research, which said that mid and small caps are trading at their lowest levels since the 2008 financial crisis. They're within 10% of those lows, and we are actually still looking at another probably 20% downside in mega cap tech. I think there is a scenario in which the S&P trades down to 3,400, right? SPX trades down to 3,400 or 340 on SPY, and we still see growth and some of the growth names higher than where they are right now. I don't think that's unrealistic, okay? I'm not saying it's going to happen, but yes, I could see SPY coming down an additional 27 points, testing those pre-COVID highs, and then looking at, okay, where are we at from here? I do think there's more downside, especially in the short term in stocks like Apple, in stocks like maybe even Amazon, and some of those big mega cap tech names, Google, etc., right? I think Tesla could see some more downside. But in the short term, we did hit that 363 area on the S&P 500. So going into this week, that 363 and 360 will be those two key levels that I'm going to be really paying attention to on the downside. If we see a clean break below those levels, we could have a nice daily move down to the 350 level, which is probably that next big psychological support level. Now, that being said, we do have 22 Fed speakers on tap this week. We have a quarterly candle close on Friday. We have a monthly candle close on Friday. We have another weekly candle close on Friday. And on top of all that, we have PCE data and 22 different Fed speakers. What does that all mean? Don't force this shit. This is a week you don't force things if they're not there. SPY just hit a major point. We had the largest put volume in history. That's because partly we have so many more market participants, but largest put volume in history. Okay? Guys, we just had a massive move. I'm not saying that we are going to go to the upside now with a force. What I'm saying is you have to be patient after big moves like this, right? And really pick your spots. We talk about that all the time, but picking your spots is absolutely critical. So the next key level that I am going to be paying attention to on the upside, if we see a possible bounce, would be this 368.99 or 369 level, guys. On the weekly, this has been a major confluence point where we saw a lot of support come in. That 3,700 level was very, very important on these larger time frames. As you can see, these bigger wicks down, we saw a lot of support in this 370 to 371 range, right, on the weekly. So before we started that massive rally in July, we saw a lot of support in this range. Now, we will have to watch carefully, but if we regain 3,700, I do think we could possibly rally to 3,800 on SPX. That's going to be something to watch very carefully. I don't know if we're going to regain that. We need to regain 368 and 369 in order for that to really be a likely scenario, in my opinion. Now, 369 is going to be the first key level that I watch coming into Monday. If we can regain 369 and push the upside, I think we could see 372. With all this being said, the S&P 500 is definitely going to be on watch for me this week. I'll be looking to trade this a little bit more actively. And like I said, guys, I think it's offered some fantastic opportunities, and you can't ignore the daily volume that's been there on the indices. So should offer a really nice opportunity in either direction. On the downside, I wouldn't feel comfortable short side unless we saw a high volume breakdown under 363.28. If we see a break of lows from Friday, I do think that offers a nice short side opportunity down to 360. So no bias coming into this week. It's really just a push forward. We did see a big washout day on Friday, so would not be surprised to see a bounce early week followed by a fade soon after. My top short focus coming into this week is going to be the king, Apple. It has had a lot of relative strength. However, I do think, based upon the weekly, this could fade later this week. On the daily, we do have a potential double bottom setup, right? I'm not going to be looking to trade this one long primarily. I think there's other names I'd like to trade to the long side, but a break over 152 could spark a rally into 154, 155. There's a lot of overhead resistance here, guys, and the weekly candle, when in doubt, zoom out. There's a nasty upside selling wick because remember, we did test 160 early last week. We've pushed down. So you can see this is illustrating sellers have pushed down that weekly candle heavily. So I'm really going to be paying attention to that 148.36 level. That's where we have that daily double bottom setup, and that's where I'm going to be paying attention to in terms of a confluence point. If we see a clean break under 148.30, I think that fades really hard down to the 141, if not 137 level. So that is my highest confidence and targeted short setup coming into this week. I still think Apple has further downside. I still think it's got room down on a PE basis. I think that as far as mega cap tech names go, this one has the most air to still be let out of it. So that's where I'm kind of sitting on Apple in terms of, my broader opinion on it. And we'll have to see. I'm interested to see this following daily candle. I will look and see how we deal with the 152 to 153 area off the open, but I'm definitely going to be paying very close attention to this name off of the open on Monday. My second top watch for this week is going to be Snow, S-N-O-W. Snowflake is one of those names that actually held its weekly trend line on Friday, guys. That was a big weekly candle close for Snow. I think we could see, right, this is very similar to the coin trend line we've been playing on the weekly. However, this one looks much more intact and solid and healthy to me. I think we could see a move back to 202 if we can get over that 179.87 level. I'm going to be paying very close attention to this level, guys. I'd be looking at dips towards that trend line area of 173, 174. We touched 173.40 after hours on Friday. So again, this would be a high confidence long for me over 179.87. So basically a healthy 180 break I think would offer about 20 points of upside. However, if on the shorter time frames we test those lows and support areas from Friday, so if we were to retest this 171 to 170 area, right, I would really be interested in dips down to 171 and maybe taking a smaller size position at this 171, 172 range. So 171.81 is really the level that I'm going to be looking at. If we can hold above that 171.81 level, which was kind of that bigger resistance that we had on Friday before we gapped up into close, that would be the high confidence add area for me to the long side. Obviously, we have some resistance up here into the 175 level. But again, dips towards 171.81. If we see some larger scale wicks and buying pressure step in at those levels, I'm going to be very interested in a possible long on the 180C at those levels in that 171, 172 zone. So that's what I'm going to be paying really close attention to as we head into the day on Monday. This is also my favorite, like I mentioned, because of kind of that weekly setup on Snowflake. If we clear kind of like some of my more particular levels, guys, just to illustrate this from a trend perspective, okay, like we've really held that weekly trend. Just every single move off of that has offered, an additional $10 to $15 of upside. Right? So like if you look at times we've bounced off this trend line, okay? So the most recent big bounce off that was 826. We saw a move from 150 to 200. That was because of their earnings, I believe, though, partially. But that was a massive week, guys. That was a 45-point week for Snow. And like I said, guys, we bounced off of this in late July, on the 29th of July, and we touched 169 the following week. So that was like a 25-point upside move. So I do like this weekly trend line. I do like a possible retest of 206 either this week or next week. We're going to have to see how this weekly candle kind of prints, and more importantly, how this monthly candle prints on snow for like, kind of like future, like, bias going into, how does it look into the first week of October? Am I looking more long side or more short side? Currently, as long as that 172 area holds, I will be looking more long side here on snow into this week. If we break below 172, this could be a nice short side setup down to the 160 level, which I just marked out. That was a prior resistance, which has since really acted as support into 159, 160. So that is my plan on Snowflake. Like I said, my favorite long setup into this week due to that weekly trend line bounce. Those have been really nice setups for me lately. I'm thinking about taking a trade here in the 10K. We'll see how DKNG goes. That is going to be the next one that I want to cover. DKNG. I took this for a little weekend swing. Really nice volume profile. We are entering week 3 now of the NFL season. It was a big conference week in college sports, and I think personally that this was a strong area of resistance over the summer. I'm looking for this area to turn into support. This trade has a very tight risk at 14.6. If we break below 14.6, I'm out. Daily close below 14.6, like I said, it's invalid. I will be done. I took 3 weeks of time on this. Really what I'm going to be looking for is a possible move back towards the 17.11 area. DKNG got absolutely sauced with the rest of the market the last 4 days. I think this is at least due for about a $2 relief rally into that $16 area. I am encouraged by thinking I do believe we will get some more data and numbers out on those gambling numbers from states like New York as we head into Monday. Reason being, like I said, first conference weekend in college sports, massive NFL weekend. This seemed like a fantastic risk to reward trade to me based upon the weekly chart. My plan on this, like I said, is a tight stop at 14.6. I'll go ahead and clear my levels for you guys, but you guys can see how strong of a demand area this has been in the past. Prior to our move down to those lows at like 977, 11, we saw a lot of support at the 14.6, 14.7 level, right? So a reclaim of 15, I think, would likely send us back towards 15.50, and then 16.76 would be my targets above, right, on those shorter time frames. But on the weekly, like I said, guys, this is a massive demand area on DKNG. We just saw that same exact $5 move up off this level this past time. I don't think that this could, I think that this could be very similar to that. I think we could see a really nice weekly candle print here. This one is going to move with the 10-year yield. If you are not familiar, these growth stocks move with yields. Yields ripped absolutely crazy this past week. Okay, we saw the 10-year yield hit 381 Friday morning before pulling back 12 basis points. That's a massive, massive move, guys, right? That's monstrous move. We saw mortgage rates up to 6.5%. The Fed is acting extremely aggressive. That 75 basis point hike was no joke. I think they want this correction done sooner than later as we are getting into a more politically sensitive environment. I'm not saying they're going to act solely based on the fact that there's midterms coming up, but I am saying I think they'd rather get this kind of wrapped up and at least get to the point where they're pausing hikes. Even if they're not cutting rates, I think they need to get to the point where they're paused, right, and not actively hiking. Another hike like 75 basis points, even though the dot plot shows 50 and then 25, I think could be a serious issue for the overall market, right? So maybe we see one more small one, or I think we get a pause as we get into November, but we will see. Point being, yields got extremely overextended on Friday morning. We did have some selling wicks on those yield technical setups. So I do think there's a decent possibility that we see yields pull back this week, and thus we see growth stocks like Roblox, DKNG, Coinbase, a few of those other names rip early on in the week if we continue to get it pull back at least to that uptrend on yields, right? So when yields move down, growth stocks move up. As you can see, growth stocks have been absolutely crushed the past 4 days because of the fact that yields have been ripping super, super hard, right? Even still, I tweeted about it today, but a lot of these growth names are still showing a lot of strength. DKNG is still up 60% off lows. Coinbase is up 50%. Snow is up 50%. Roblox is up 55%. Pay attention, because even though we have the indices at their lows for the year, there are names within that showing strength. So if I'm going to be trading on the long side, I want to be trading growth. If I'm going to be trading on the short side, I want to be trading mega cap tech. right? Because that's where relative strength and relative weakness lies. So Snow, DKNG, Apple, Tesla is my last and final kind of setup headed into this week. I will review Coin just because it's kind of my daily trader. But on Tesla, this is another one where I think on the daily, we've got a decent shot for at least a bounce into the big key level at 280, right? Because below this, we're talking about a pullback down to where those kind of like major defense line is at 260. Right? Because 260 was such strong resistance for Tesla to get through. If you remember when Tesla tested 200 back in June, that was a major hurdle to clear 260. Because you can see after we cleared 260, we went on a rampage, right? For 3 weeks. This one was part of the reason we saw such a big rally in July and August, right? So now we've pulled back and we're testing 271. While 260 would be a higher confidence long area for me on calls for a few weeks out, if we hold this 271 area into tomorrow, Tuesday, I do like this setup more to the long side as we head later into the week, right? So I want to see a couple, like at least one more day of basing in the 271 area, but primarily, I don't think risk reward is short side here. I absolutely nailed this trade from a idea and thesis perspective. I said under 300, we would see probably 280 really quick. We cracked under that 304 level. We saw a 20-point move down in 2 days. I mean, that's really like all you can ask for. 30-point move down, from 300. Those 290 puts that I took on Wednesday, I think printed over 2,000%, guys. So remember, you can't have like FOMO about trades like that, right? Even though you might have FOMO about trades like that and want to go and reshort Tesla again because you feel like, oh, well, I sold for 86% and my Tesla puts went 2,000%. Well, guess what, guys? That trade happened. You have to approach things from a clear and concise emotional and mental mindset. You have to look at things like, where is the best opportunity here on Tesla? And for me, the best opportunity here, right, is going to be a hold of this 271 area. And then I think there's at least a 12 to 15 point upside move possible here if we hold 271. If we break down under 271, that's where I could see a move back to that 260 big key level on the weekly. So those are going to be the levels that I'm watching on Tesla. Like I said, if we hold 271.72 on Monday, I'll definitely be looking to take this to the long side for a move to that 282 level. I've mentioned this a few times, guys, but when the market environment gets a little bit more volatile like this, Tesla is really a trader that I latch onto because of the volume and the potential moves that we get here. This thing can really, really get moving even after it's split. Obviously, this one had a big split a couple months ago, and since the premiums are obviously really nice to trade for even small accounts now, but this one can still provide fantastic moves like I just illustrated. From Wednesday to Friday, this had a 34 or 35 point move. So that's absolutely insane. And there's so much opportunity when stocks move like that in terms of options. So that's why it's one of my absolute favorites. So obviously Tesla, a big watch for me both ways, but primarily I think early in the week, if we hold 271, long side looks good. As far as those shorter time frames go, like I said, 271, 272 is major defense area. 271.72 would probably be that level, that bias level for me. If we saw a couple hourly candles close sub 271.72 into Monday afternoon, maybe we get an additional fade down to 260. And if we see 260, that's definitely going to be an area where I look at adding probably a swing on some long calls. We did have a lot of bullish short-term call flow, which leads me to think we may see a little bit of a bounce in the market in Tesla late in the day on Friday, like 347 to 359. I think it was like $2.3 million in 930 call flow came in. So definitely going to be paying really, really close attention to that as we head into this week. Now, a couple other things, guys. Like I said, Coin is going to be the last one I want to go over. This has been a daily trader for me. Exhibited really, really strong relative strength again on Friday. This almost closed green. I think it was down 1% for the day. 59.99 into 58.88. So 60 to 59 is this very strong support level, right? If you look at the daily, this did crack under its weekly trend line. However, it does have a lot of daily support and weekly support at that 58.90 level, and it's definitely going to be a level I'm paying really close attention to, guys. If you look at this daily level, right, you can see we had a lot of wicks down to this $59 level. So again, people like can think what they want, but I personally have loved, and coin has been easily, I think I'm up, a little over $300,000 on this ticker over Q3. So the process has worked, right? And yes, that's involved 2 huge trades, but the majority of those gains have come from just the consistent day trades here, right? Because it's offered so much opportunity on so many different days. Off of this 59 level, if we retest that level and we do see yields pull back alongside DKNG and SNO, this is one of my favorite long setups for a move to 72 to 75. A lot of resistance at that 75 level, but I think we should see a move possibly again off of that 59 to 60 level back into that 74 resistance, even if this is going to even continue a little bit lower, maybe towards 55 in the medium term. I do think we probably need to retest 75 resistance and then head lower, but we'll see. It cracked below its weekly trend line, so it's really going to be important to watch the volume and again get a sense for the daily candle that forms here on Monday. Like I said, guys, if I need to say it again, 22 different Fed speakers this week, a quarterly candle close on Friday, a monthly candle close on Friday, obviously a weekly candle closing, and just a very massive, very volatile and massive move the past 3 days in the market. So really you need to keep your wits about you and be extra selective in this week. It's been a fantastic Q3. The last thing I'm trying to do is give back anything from Q3. This last week of the month, I'm really going to be looking to be, 1 or 2 and done type of deal. That's something that I really need to improve on right now. And like I said, guys, there's always room for improvement, no matter how good of a trader, no matter how long you've been doing this. The one thing I would say is that there's always room for improvement. So those are my top focus setups for this week. Very excited for the setups and content that we have coming in October, guys. Thank you guys for another fantastic month. It's been an absolute joy and pleasure, and I've had such a great September. This month included my second biggest trade ever, which was on coin. That was that 4,000% move we got overnight 2 weeks ago, and it was absolutely insane. So it's been a crazy month, guys. I hope you have enjoyed these Sunday scans. We plan on making these even better in October, and you will see how next week. I'll see you guys on Voice and Pre-Market Live tomorrow morning. Let's kill the end of September. Peace out, guys.